everybody. Welcome to Sunday Fuel. I'm your host, Sacred Prophet, here going over the trades from last week and the week ahead. I'm here joined by my trusty Aaron and Trading psychic, Peter Bad Guru Hardman. How's it going?
Wait, I didn't play the intro.
Yeah, that's what I was wondering.
All right, here we go.
The year is 2020. As the old financial empires collapsed and crypto drowned in noise and false prophets, one man lost everything. And in that loss, he was called. Through the wreckage of his own failure and the precision of his charts, a higher force revealed what others could not see and entrusted him with a mission to guide others through the chaos he barely survived. They call him Sacred Prophet. And now, the revelation is yours to claim.
That's my bad.
Welcome back. That's right. We're back. I am your trusty host, your leader who guides you through the desert. But it means that we also might be in the desert for 40 years. Like, that's just what happens.
No, I don't want that.
Yeah. Sometimes the leader has his own beef with the Lord of liquidity and God, and you just sort of have to work it out. And it's the flock that sort of has to pay the price. That's just how it goes. So just know that you're following a prophet. You have to spend 40 years in the desert. After that, your kids and your kids' kids, the promised land.
Then what's the difference between you and just a regular person on YouTube?
A regular person on YouTube is trying to sell you something, snake oil, trying to just make it seem like they know more than they do. Just a regular average person, that's 85% of what's going on there, a bunch of scams. That's not what this is, right? This is me interceding on your behalf with the Lord of Liquidity, trying to make sure that the Lord does not wipe you out for your infidelity, your faithlessness.
Okay. All right.
I'm here in the situation of trying to find. Remember the story of Lot? Find me 10 good men in this city, and I will not destroy Sodom and Gomorrah.
Yeah.
We're in that process right now. I'm trying to find those 10 good people. That's what it is.
That's funny.
All right, Peter. Mm-hmm. Last week's trades for Bitcoin has been pretty interesting. One of the more interesting setups we've seen over the last week. It actually just flew in the face of a bunch of the stuff we've been talking about in a way that's very healthy in order to reinforce the rules that we've been talking about. Let's just go ahead and take a look at the screen. Now, if you guys will remember, on this Sunday Fuel, we do like talking about not only Bitcoin levels, where it can go, what price action is telling us, demonstrating the usefulness of our indicators free, available at sacredprophet.com. We're also about risk management and be like, how can we actually trade 50x leverage in a way that doesn't completely ruin our account? Now, there are certain rules and setups that we take a look at and things that we bank on to happen, but none of these things are 100%, which means our number one rule of not betting more than you're willing to lose, or that you can afford to lose. I don't want to say willing to lose. You might be willing to lose everything in your account, have to be followed. So we've been talking about, do you remember, Peter, what percentage I've been suggesting people spend when they're trying to get into one of these 50x leverage trades?
2.5% of your portfolio.
2.5%. That's right. 2.5%, because one, you're assuming a failure for the entry. You know, it could happen. Sometimes it takes 1, 2, 3 times for us to get it. And two, you know, at most, you want to be betting, you know, really at most 7.5% in order to get into any of these trades, expecting, you know, 2 to 4x return. But if you just lose a 2.5% to 7% of 7.5% of your portfolio, you're not like blowing it out, right? If you lose 7.5% of your portfolio, you only need about 8.2% in order to get back up to break even, which is totally doable. Versus if you do something like 40% drop, you need 66% to get back up to break even. Can you imagine that? Just betting for 10% to 15% at a time, and just like hoping beyond hope that it moves up, 2x, 4x, you make a bundle of money. But if you lose, well, then you lose up pretty bigly. Versus like, what is it? If you lose 90% of your portfolio, you need to move up something like 900 to 1,000% gain in order to get your account up to break even. So guys, number one rule when you're trading with high leverage, small position sizes for massive gains over time. So last week, right? Last week, when we talk about Mondays, we usually refer to Marauder Monday, right? Mondays are what we're looking for. We're looking for a move that then needs to be faded for the remainder of the week. If we take a look at the move on Monday here, this was the Monday move, and we had a move down and then a move up, right? So we've been seeing, in general, when we have these double moves where basically the same order of magnitude of the move happens on Monday, but the rest of the week is still pretty choppy, right? You can get massive moves up, massive moves down, which is what we saw last week. So not last week, but the week before last, where we had this move up and then down on Monday. What happened the rest of the week? Well, we had a massive move up and then a massive move down for the rest of the week, right? It doesn't have to exactly match that. I'm just saying that the trend for the week can't necessarily be decided. It means that we're going to have a pretty significant volatility. And the same sort of thing happened this time. For this week, we had a move down about 1.8%, something like that, and then a move up about 2%, right? So that showed us there was no clear move decided for Marauder Monday. Even if we extend this out to the rest of the week, where Marauder Monday can continue all the way to Tuesday, there was no clear direction. And so we had a move down, we had a move up that was dramatic, and now we have another move down that's even more dramatic, right? Totally expected in a week that's volatile. But when we take a look at the daily moves that are happening, it's comforting to know that if you wanted to trade in and out during the week, you could have done that. The levels were there for you to follow. So let's jump down to the 15-minute chart, and we can take a look at what happened over here. So we'll notice here that, and Peter, I'm sure you could see this right away when we jump out, that one, we had this weekly level from the previous weekly level that was unmitigated, right? So the price over here that we were looking at, this 115.8, which was the level from the previous week. Let's just head over to the dashboard. You'll see here 115.8. Remember this 115.8 level that was just the previous signal? We actually got there. The price actually moved down to that level. And then it's no surprise that at that level, it coincided with this longer term average, this green line that's piercing through here. And that's the price oscillated around this level, more or less. So here the price moved down, then up above that level, came down, moved back up to that level, and now we moved down. So basically this was confirming a downtrend bias. We did have the weekly level at 199 that was calling the price, right? So the price kept this sort of attempting this upward movement, but we had a bunch of resistances that were coming into play, right? We had this daily level over here. We had this green teal, this is the monthly level. And again, like I said, this longer term trend. So we had a bunch of resistance in here that we weren't able to break through. So even when we moved up there, we started moving down. During the week, though, if we take a look at some of the daily trades, let's just zoom in a little bit more. Let's see here. You have over here, the daily level for Tuesday was here. And so we actually were able to, if you wanted to, you could take a short right from that level, right from the daily level, that totally paid off for the rest of the day. All right, same thing over here. This daily level over here, again, since we're in the short-term bearish trend, if you wanted to, you could have taken these trades where you had another daily level here at 114.8 that if you shorted, again, you could have shorted for the whole rest of the day. In fact, this downside short was easier to take because once this day closed up here, we closed up here, the daily level for the next day showed up here at 113.5. So this downward move is to be expected because we're shorting from the daily level down to the next daily level. We even bounce off the weekly VWAP. So you see how these things come together with these indicators. You have the waves that are letting you know, hey, these are the currents of movements that are happening through the price. You have the daily and the weekly VWAP levels that are letting you know, hey, this is where the main current is for that day or for that week. You have these targets for prices where you can actually get in or out of the trades depending on what bias you want to take. And if you're nimble enough, you can move in and out of these trades, these positions. Which is pretty fun. All right, now, the most interesting part for the week was certainly Jerome Powell at the Jackson Hole event making a speech. And the speech that Jerome Powell gave was, there's no way to sugarcoat it. He basically bended the knee to the Trump administration going, hey, we're probably going to have to go ahead and cut rates into the future. We talked about this on Revelations early on the channel this week on Friday, and we also went deep dive into Jerome Powell and what he said at the Jackson Hole event, the two things that I thought was most important on the Trader Pulse channel. So you can go take a look there, again, last Friday for more information. But essentially here, we're fall into the situation where both growth and supply, or rather, both growth and inflation are given contradictory signals to the Fed. That growth is slowing while inflation is staying stubbornly, a little bit higher than their expectation. So the supply and demand curve have both been shifted to the left. So the supply has fallen because of the higher inflation and the rejiggering of the supply chains because of all the tariff stuff and lower growth. The supply has gone down, which would normally make the price go up, but demand also went down because people have less money to spend, they have less disposable income, and we had, again, massive deportations that are happening all around the world. So it's basically like, I made this analogy on Friday, it's like shooting a guy in both legs and be like, hey, they're even. They're even height. Yeah, but he's shorter than he was before. Yeah, but it's like even. And the Fed deals with volatility, right? If you got one leg shorter than the other one and you walk around in a circle or you can't run straight or what have you, you don't have stability, the Fed goes, just cut off the other leg. Let's make everything less volatile again. So we had this move up that happened on August 22nd where the price jumped up. Now here was the big tell, Peter. The big tell here was that the price moved up to our monthly level, but we never actually got quite to the daily level over here. And we certainly didn't move up to the weekly level of 199 that we were targeting. All right. So then the thing I was taking a look at, the thing I was paying attention to for the end of last week is what happens on Saturday and on Sunday. Right. So Saturday is a sideways day. We call it a sideways Saturday. And what we had was that the price fell to the daily level on Saturday. Okay? Fell to the daily level on Saturday. Easy trade, easy thing to expect that the price in low volatility, low volume falls down to the level. It also coincided, that daily level also coincided with the weekly VWAP, with the monthly, yellow monthly trend. Everything was lining up for the idea that the price would come down to this level. And if we were going to bounce, it would be around this level. If we were going to bounce, it would be around the 114.6 level. We didn't. Come Sunday, come this morning, the price bounced up a little bit to get to the VWAP level. So this is the VWAP level, the daily VWAP level for 115.4, which you will see if you used our free indicators at sacredprofit.com. This is the levels indicator from our anchor set. It went up there, and then it moved down from there. Okay? So once that started happening, I started thinking, hey, we're not getting the response that we need. Yes, I know we have $15 billion worth of shorts versus much less, an order of magnitude less in longs. Totally understand that. Yes, we are in a long-term bullish trend for Bitcoin. We're in a bull market. We've been in a bull market since 2023. Yes, even today, I believe Ethereum and BNB altcoins, major altcoins, hit all-time highs. But we need to see this in the price. We need to see the price respond to these levels in such a way as to give us the expectation that the next move in the short term will be what we expect. And that didn't happen. So we had just over, what was this? We're at 3:30 now. Just over an hour ago, Bitcoin decided to fall about $4,000 worth in 15 minutes. All right. Why is this? Well, the bearish trend, we're not getting the momentum up to our weekly level of 119. So where is the next level? Where is the next level being called? Where there are a couple of levels below us that are calling the price. One, this is the seasonal, this purple is a seasonal average, the seasonal volume weighted average, and the price fell almost exactly there in order to bounce back up, all right? So that's calling the price. The daily level over here at 198 also is calling the price. And if we were to take a look at the actual daily, there's an unmitigated weekly level here on the daily chart at 103, 104. 104 here is the next level down, which is more and more seeming like this could be the case. That's
104?
That's what we're going to do. 104, correct.
So that does that mean the bull market is over?
103.8. Let's call it 103.8. It's actually 103.8.
Does that mean the bull market is over and bear territory we've topped?
No. So for the bull market to be over, well, let's actually take a look at that.
Well,
We'll
just
get a
before we do
screenshot.
that, I don't want to drag you there. I want you to finish your point before.
Yeah. So right now we are smack dab between two levels, right? We're right between the 119.9 level, which is above us, and the 103.8 level, which is below us. We're right in between there. And so because we're in between, and these two levels are essentially equal, there is no indication for us right now to bet on which direction this might go. All right? There's no point in us hoping and putting on a bet, especially in size, hoping what direction it goes in. Sure, we have from here a 6% move up, and we have from here a 8% move down. And you times that by 50x leverage, it can be a pretty healthy trade if you put it on. But the problem is that we can only suffer, let's say, Peter, you decided, I'm going to go ahead and put the trade on, both long and short, right? Because we can do that in crypto perpetual futures. I'm just going to put a long trade and a short trade. Whichever one gets liquidated, I'm still going to have the other one. It'll reach the target level, and we'll go ahead and make money. That's the idea here. But we have a problem with path dependency. Remember, at 50x leverage, you could only suffer a 2% drawdown, or rather a 2% drop or move in the Bitcoin price before the position gets liquidated. So if you're long, you can only take a 2% drop in the Bitcoin price before that position gets liquidated. And then you'd have to put on a second one if that's what you're trying to do. Same thing for the other side. And because we have a 6 and 8% differential on either side, the price could move up 3%, down 6%, up 3%, and vacillate in between there and liquidate you again and again and again and again and again before it even actually gets to the target levels. So I do not recommend at this point taking any trade for those two levels, 119 or 119.9 or 138, to try to play both sides here. Not a good idea. What would I do? If the price gets to 199 from the bottom, I'd short from there. If the price gets to 103.8, I'd go long from there. You go, Tom, yeah, but what about the overall bullishness if we get to 119.9? Does that mean that the bull run's going to continue? We could still drop, right? If we reach our levels from below, I don't try to like guess anything there. If you don't want to short a long-term bullish trend, fine, don't short the long-term bullish trend. I'm just saying that if you were going to short, I would do it from 199 and not from where we are right now. If we break above that, we break above 199 and then we revisit that 199 level, fine, I'll close my position at break even and then take a long from over there. Not trying to be a hero here. and I get washed out, well, then I get washed out. That's what trading 50x leverage does. So I hope that's clear enough. We're smack dab in between two levels. There is no clear direction on price. And even though there's a bunch of bullishness that is available within the markets for people buying and leverage positions that are on, you are taking a big gamble that we don't take a 2% move in the opposite direction that you want to take before that trade succeeds.
But that problem only exists.
Thunder.
That problem only exists if you're trading 50x leverage. If you're not trading 50x, then you don't care about that.
Yeah. So if you're not trading 50x leverage, I would still go, well, why do you want to get into the trade here? Right? So at 25x leverage, you still could only suffer a 4% move. Right? And we're dealing with 6 and 8. So it's the same problem. You still could get liquidated twice, 3 times, 10 times in this process. We don't know what's going to happen. Plus, with the level of shorts that we have, liquidated shorts, we could absolutely get some massive candle that liquidates you to liquidate shorts and liquidates you to on the short side before that peters out and we move down to the other side. We just saw that happen on Friday, right? Where the price of Bitcoin moved up dramatically, liquidated a bunch of shorts, and then the price fell down. So that could absolutely happen again and again. So you would essentially have to have a leverage position that was beyond 25x, less than 25x, right? So if you're dealing with 10x leverage, 5x leverage, well then still, why would you get in now? You might as well just wait. You've already been accumulating. You might as well just wait until the price goes to 103.8 in order to go for your long and wait till 119.9 in order to do your short. There's like no real reason to jump in right now. That's not based on hopium, which is not what we do.
So is the bullish trend over? Are we in a bear market now? Have we topped?
Yeah, so we talked about this last Sunday, that the pattern that we seem to be repeating is the same sort of pattern that we saw in 2024, right? Where the price moves down towards the yearly level and then gains the steam in order to move up. If that is indeed going to play out, we should be expecting a move down almost all the way to 84.5. Let's call it 85,000.
Huh?
We could totally get a move down to there. Well, remember, like last time when the price of Bitcoin went from 73,000 down to 49,000, right? This was a 33% drop. Well, 33% drops are totally normal and expected in Bitcoin bull markets. So a 33% drop would bring us to around 83,000. And that's totally normal, and it would still be a bullish trend.
It wouldn't feel very bullish to me if we went to 84,000. I'll be honest with you. I'm going to feel like, yeah, sky's falling.
Has incurred the sentence of excommunication.
Bitcoin has been in a bull market since October 2023. Where have you been? All right, other than AI assets and maybe options on gold, where have you made 6x just holding Bitcoin? And even more than that, trading 50x leverage on the way up. Excuse me, I'll take my 33% and I'll bid my longs who got liquidated. I would thank them for their sacrifice.
Okay.
Because the fight will continue. And the bulls will win as long as this bull market continues. And we'll move up steadily, one dead liquidation body at a time.
Okay.
So Bitcoin can fall to 84,000, 83,000, and still be bullish, my friend. The only time we're going to be taking a look at Bitcoin no longer being bullish is when we're seeing the same sort of pattern that we saw last time. And that's crossing below the yearly average. This cross, and only at this cross, is when we're going to be paying attention to that. All right? So until then, I don't want to hear any nonsense about how the bull market is over. If we're in a short-term downtrend, we go ahead and we short, or we add to our positions, or we manage it however we need to in order to make our money, or we sit on our hands until the price actually confirms the bottom. And until then, I don't want to hear any complaining, because these indicators are free. You could put them on your chart, and they're available at sacredprofit.com. No reason not to have them. Plus, you have me. every Sunday and sometimes during the week, providing you with the guidance and the interpretation from the Lord of liquidity.
Okay, well, thank you. Thank you, Your Honor.
I'll take that. Like the sound of that.
All right. Sounds like
Mayor. All right. So for the week ahead, what are we
is
taking
that
a
a Back
look
to
at
the
here?
is that a Back to the Future reference, Mayor?
Yeah. He's gonna be mayor. Mayor. I like the sound of that. A black person mayor? Yeah, that'll be the day. You'll see. I will be mayor. And come back and clean this town. Cleaning. Why don't you start with this room? I can't.
Okay.
I can recount all of Back to the Futures. Opens up. Clock on the wall.
Clocks.
All right. So taking a look at the week ahead. All right. Let's take a look at the week ahead of what we can see here. Right now, the weekly level that's about to be opening up will be around 114.5. 114.5 will be the level to target. And the question is, do we get to that price by the time 10 p.m. rolls around Eastern Standard Time? So you'll get the trade signal from sacredprofit.com inside of our dashboard. It'll be updated over here. But essentially, right now, that's what's developing. 114.5. If we get to 114.5 before 10 p.m., there's no more weekly trade, right? If we're like right around that level and it opens up for the weekend, that's where we are. There's no more open trade, and it actually makes it far more likely that we fall. Okay, whenever we open up at the level that we're at from underneath, the chances are that we fall. We saw this over here on Sunday. You see here the price opened up right at the level for the daily, for the week. So then there was no more upward momentum and the price fell down. Whereas when we open up, before, let's say we opened up over here and this is the daily level, well, then we could fall into that price. All right. So if the price moves up to 114.5 and stays around that level as we open, like right around that level, expect a downturn. If we rise above 114.5 before the 10 p.m. hits and Cinderella turns back into a pumpkin, what does Cinderella turn into? I'm not even sure. Then you're going to expect that this will be the level and the price will move down to there. Right, so you can always take a short to that level if you're interested, or wait for there in order to buy a bounce for a long. If we stay where we are right now, below the 114.5 level, this is the opposite. As the week goes on, we have to expect that the price will move up to that level, and then you'd be shorting from that level if you're willing to short a long-term bullish trend. So 114.5 seems to be the level for the week. If we do get a bullish momentum, we do have, as you might imagine, even more shorts to liquidate. So right now we take a look at, this is from CoinGlass, we take a look at Binance, OKX, and Bybit, Bitcoin exchange liquidation map. We take a look at the 30-day level for Bitcoin. We are now up to 15 billion short versus 250 million long. So if there's ever any catalyst towards the upside, the shorts, I mean, I just love just the shorts that come in, and then you get these wrecking moves to the upside. So I would actually always bet towards the long side here, because chances are they get just reamed, right? And it goes from 15 billion down to 7 billion in a snap. And for every 1 billion you see here, think of it in terms of percentage. It's about 1% for every billion. So if there's 7 billion that can get immediately liquidated, that's a 7% move up on Bitcoin, and a 7% move up on Bitcoin from where we are right now is basically to our weekly level of 119.9. So like that would make sense to me that happens and boom, we move up, right? Now, so let's just take a look at some of the, we talked about some of the bearishness that we've seen in the chart. One, the price action is short-term bearish and medium-term bearish, and we don't have any strong levels above us pulling the price other than the 199 and this daily level at 120. But obviously, there's way more downside pulling than upside. And we also have the idea that the Fed is telegraphing cutting rates. That usually happens because bad things are happening. As I mentioned on Traders Post, and I believe in our revelations, the Fed doesn't cut interest rates because things are great. They cut interest rates because they see either some major thing happens that everyone sees and they have to respond to it quickly. But when they do it like this, when they forward guide it like this and nothing has happened yet, it means they know things are pretty bad behind the scenes and they're trying to front run it. So that means problems in the medium term, which means we can get massive drawdown, right? 30% easy on Bitcoin, 10-15% easy on the NASDAQ and the S&P. We're also heading into September, October, right? So summer's going to be over. The low volume summer's going to be over. We're headed into September, October, which is a quarterly OPEX period, which is dangerous. The two most dangerous OPEX periods are from like September, October, and like February, March, or even like March, April. Those are the two periods of the year where, for a number of structural reasons, there is great weakness that can appear within the chart. Essentially, people aren't very well protected to the downside because of all the expirations that happen with their options contract, and volatility is not well supplied. And if something bad happens, well, it can really drop the price then. That's why most stock market crashes happen in September, October, and in March. So as we head into that period, it can be pretty dangerous. That's the bad news. The good news is, when we take a look at our liquidity projections, we're still bullish on the liquidity projections. All right. Something I was not really expecting to see and that I'm pretty happy to see. And by happy, I mean, it's bad for people not exposed to markets, good for people exposed to the markets. I'm never sure how to do that. It's sort of like, if something's good, Peter, for the West, but bad for the Middle East, do we say that it's a good thing?
I was going to answer that honestly, but I'm on the internet, so I don't know.
Okay, let's put it this way. If something is good for India, but bad for Pakistan, like if something happens and it makes Indians better off, but Pakistanis worse off, would the Indians say this is a good thing that happened?
Could you pick a different country other than Pakistan?
If something between, if
Don't say Russia.
English Guyana things were good for English Guyana, but French Guyana things were bad for French Guyana, would the English Guyanese people say that this thing that happened was a good thing?
I just feel like the French-English thing is a little controversial. Hey, I'll give you two countries.
If it was good for League of Legends, but bad for Dota, would you say that it was like good for League of Legends? That we say this thing is good?
I don't know enough about the ethos and the people who play those games to be able to say. My immediate gut reaction is, fuck League of Legends, okay? Just fuck them. But I don't know. I play League of Legends, which is why I say, they can go to hell.
Well, there's always this argument about the discrepancy between the rich and the poor. The spread between the rich and the poor.
Oh, that's easy. I'm for the rich. Yes, if it's good for the rich, then it's good.
As that spread gets wider, right, people say that this is a bad thing, which I totally understand, because it causes unrest and rich people get their heads guillotined off. Totally understand why that's a bad thing. But that there's a spread between the rich and poor, I mean, even the Bible tells us the poor will always be with us, right?
No, the Bible says that the poor will become filthy rich. That's what it says. The meek shall inherit
the earth.
Well, meek, poor, it's about the same thing, right?
No, you're going to be meek and rich.
Okay, that's well, it's easier
if I'm anything, it's meek.
Right. It's easier for a poor man to be saved.
The rich man to go through the eye of a needle.
Exactly. So poor people get everything.
It's easier for a camel to go through the eye of a needle than for a rich man to go to heaven. There.
Look, I don't know. Okay, quoting the Bible is not my forte.
If you were going to tell me, hey, It's possible for there to not be a discrepancy between the rich and the poor, and everyone could be up to the rich level
Yeah.
and experience that life.
No.
I'd say fine.
No.
Let's just go ahead and do that.
No, don't do
But it's
that.
not going to happen.
No, I
That's not
can't
gonna
tell. No, I can't. We need contrast. You can't have everybody up to the same level.
Exactly.
Yeah.
So when the central banks and the Federal Reserve do something that's good for those who are exposed to markets and bad for people who aren't,
Mhm.
I call that a good thing.
It's a good thing. I think technically
Even
it's
though
a
they're
good thing.
taking from the poor and given to the rich, which I guess when I say it that way, it sounds, I could see now where the problem lies.
Oh, can you though?
But if it's going to happen anyway,
Right.
deal me in.
All right. Okay. Tell me what's going to happen.
Look, slavery time.
No.
I want to be a free
No.
slave, right?
No.
I want to be a free slave. Free
No.
me, all right?
Squash.
What's required
Squash.
is that I catch a
Hang
few.
on. All right. Tom can no longer be seen. He can no longer be heard. Slavery is where I draw the line. All right. I draw the line at slavery. All right. People want to know about the charts, Tom.
I'm good. I fixed it. It's done. Just cut it out in post. We didn't say anything about
I
it.
cut it out live.
So, the dollar, right? The dollar, we talked about the global liquidity, which is the availability of dollars in the credit markets, yes. But then we also want to take a look at the dollar itself, which is sort of like our barometer for what's going on with the dollar, right? The dollar goes up in value. It means people are bidding it up, which means they want dollars and they're selling other assets. And if the dollar goes down, it means they're selling the dollar in order to buy assets. That's why the dollar going down is generally bullish for equity prices. And we had this dollar move up that was happening pretty dramatically to the point where I was wondering if this would mean the end of the cycle, if this would be a cycle top. I didn't mention this to everybody because I didn't want anyone to be scared. But
Scared.
this move up was pretty...
Wait.
pretty rough.
You held back information because you thought we'd be scared?
Sometimes people need to be lied to by people in power in order to keep them safe and secure.
Okay. All right, Obama, Donald Trump, Joe Biden, next president.
Because you don't know you're dreaming.
People are idiots, Peter. You got to protect them against themselves.
All right, let's finish this because we got a question in chat. So
Yeah, so the dollar fell dramatically. Look at this fall. This is a fall of, what was this, 1.7%? 1.3%. The dollar fell. 1.3% drop in a trillion dollar market is a lot of money, right? That is people making decisions for the future. They go, hey, sell this dollar. We're going to go ahead and let le bon temps rouler. It's my new favorite line that Ken Carson was saying on StockTwits. So that the dollar fell, I was like, oh my God. Oh, phew. Now, we did fall right to the lows that we were at before. So like it could rise from here, but it seems unlikely that would be the case and that we're going to have some sideways action and the price of the dollar will fall again, which is hella bullish, folks. It's hella bullish for equities. So that's why a 30% drop here in Bitcoin, I wouldn't really care. And I would expect not only a rise, but a significant rise because the dollar would be falling to a new low. Let me just put this in context for you here, Peter. Let me show you this so you can really see what it looks like. This is the dollar. Let's see it historically. So this is, the dollar is below the 100 level that's been there for many years. It fell below here, and if it falls, if it continues to fall over here, it'll be even lower than trend. So like we'd be falling more than what we fell, let's say, after the COVID crisis that led to a massive run up in equities, or the last time Trump was president. So this stuff is all pretty bullish for prices. So that is pretty exciting. If we can get all the way down to 92 on the DXY or whatever it is, this is on the DXY futures, but 92 here, we'd be seeing 400,000 Bitcoin. Like that'd be pretty high. Yeah. This is pretty interesting stuff.
Well, that means that the world is collapsing.
Yeah, or lockdown or new wars or whatever. Like I said, what's good for the goose is good for the goose. I also thought this was pretty interesting. Let me see if I can pull this out here. 1 second, Peter.
Before you go too far, well, as you're looking that up, we have a question in chat regarding Ethereum and Chainlink. Can you please also tell us about ETH and Chainlink, please? So I don't know if you know about Chainlink, but
Well, ETH, I have to completely eat my hat on ETH because ETH has just, I mean, it's all-time highs now, right?
we'll talk about that in a second. I want you to finish this point, and then we're going to talk about that in a second. You were making a
so if
point
we take a
about
look
the
here, I thought it was a
dollar.
good illustration that was happening on Twitter, where someone was talking about the market for Bitcoin. Let me just show you this. This is the Bitcoin over a 4-year cycle. All right, this is the Bitcoin chart we're all normally used to, broken up into the 4 cycles, the fourth one being the one we're in right now, overlaid in order to get perspective, and then displayed this way. And this is showing us that we are essentially not even halfway through the bull market, if that were to be the case.
My Lord.
Yeah, which to me has been like the thing I've been thinking about, that we're not really at the end of the cycle. Like if they're just starting to cut rates right now, remember, the cutting of the rates of COVID led to a massive run-up. At Volmageddon led to a massive run-up. Sure, this short-term volatility, but it doesn't mean that the cycle is over, especially if they're preemptively cutting the rates. They already cut rates by 1%. Now they're cutting more. Like Latin liquidity is coming in. The days of Silicon Valley Bank going under and all that stuff is behind us, guys. We're ready for new all-time highs. Peter, you were asking about Chainlink and Ethereum from the chat.
Yeah, actually, we have Brasco here in the chat who's asking, can you please also tell us about ETH and Chainlink, please? So it sounded like you were going to explain eating your hat with Ethereum, but then there's also this Chainlink thing that I haven't heard about.
Yeah, so ETH, I have to eat my hat on because, I mean, it broke to all-time highs. I thought it would definitely never hit all-time highs again, and it most certainly did. And this is more proof to the that altcoin season is just starting, guys. Like we're just starting altcoin season.
That's wild to think about. It's wild to think that we haven't actually really started the whole thing. Like a lot of people talking about this is the top. I mean, we went up 120 something, like it was exciting. And if this is like a drop in the bucket, we're not ready. We're not ready.
Well, just always remember, I wish people understood this. Look, Lord of Liquidity tries to speak through me, and I try to make this clear to people, but they don't seem to understand. The government's not sitting around going, I wonder if I should add liquidity to markets. That's not what's happening, folks. They're thinking, how can we add liquidity to markets? That's what they're thinking.
All right. I don't want you to get sidetracked. We got to talk about Ethereum.
Yeah, so Ethereum is moving up, and it's if we take a look at the chart, let's just throw on a little bit of our indicators here, switch this to logarithmic, and see where we might be going. Okay, yeah, so we're in blue sky territories for Ethereum. Let's just go ahead and do a quick analysis. Bullish all the way through. 1 second here.
What indicators are you putting on right now?
I'm putting on levels and trend from our anchor series, as well as wave from our cycle series.
And this is what? These are what kind of indicators?
So our levels and trend indicators use VWAP in order to see how institutions are responding to the price. Our wave indicators are volume weighted average price, which lets us know in general where retail traders are in addition to institutional traders. And then we're taking a look at this on a multi-time frame. That's what the chart is at the bottom right, in order to get an idea of the long-term trend. So here we are, it's bullish for long term. So for 1 month, 3 month, we are very much inside of a bullish territory. We're oscillating around neutral right here as we're hitting all-time high. So definitely you can expect some pullbacks, maybe once or twice down to one of these lower levels. So yeah, so we can absolutely expect to see, let's see here. I would not be surprised to have this green level. You see this green level here got touched once, twice, 3 times. Would not be surprised to see this move up a little bit more and that we keep revisiting that level. But since we are in breakout territory right now, once we break out of these levels over here, we can absolutely see Ethereum get to 6,000 or more like in a blink of an eye. It could totally occur. Especially since I haven't looked at it specifically, but I think the amount of shorts on Ethereum is pretty high. Let's take a quick look. Okay, it's not as high as I thought. It's 2 billion versus 500 million. So not a huge amount. So maybe 6,000 a little bit more optimistic, but certainly instead of the close to $6,000 range seems totally possible.
Have you heard about Chainlink?
Yeah, so Link is another one of those.
Chainlink is a decentralized Oracle network built mainly on the Ethereum blockchain. It acts as a bridge between blockchains like Ethereum and external off-chain data sources, enabling smart contracts on blockchains to securely access and interact with real-world data that they otherwise can't reach on their own.
Yeah, so I used to use Link a lot because it was so cheap in order to transfer assets around. So like, I love that versus the fees on ETH and how much faster it was. Now I use Solana for that. I use Solana and sometimes ADA, but ADA, like I'm a long-term holder of that, and Solana is what I use in order to transfer in and out of networks and stuff like that. So my personal use of Link is pretty low, but if we're going to take a look at the chart, it is gaining based on the traction within the altcoin season, and we did seem to have a floor here at around $5.75 that stayed there for about a year and a half. So you can't expect much lower than $5.75, but the upside potential on this versus what we saw on Ethereum, I don't know. It doesn't seem particularly promising, but I don't know what's going on inside of the space as far as development is concerned. So maybe there's things that are happening there, but I'm not seeing that here. Let's see what the if there's any information on the shorts. Yeah, so 70 million short versus 9 million long. Really not a lot of volume happening here. I use leverage positions as a indicator for a proxy for volume and interest. This to me is very, very low. Doesn't mean that it can't, skyrocket to $60 per coin. No, but give me 50x leverage trading instead. Thanks.
Brasco has a follow-up question here. So according to you, what will be the best price to open a long position in ETH?
Oh, good question. Best price to open a long position on ETH. I'm assuming they mean for leverage and or if you want to accumulate long term and you want to get the best prices. For ETH, I would be looking for a pullback to, let's see if that doesn't count as a pullback. If this pullback to $4 wasn't the actual pullback, I would expect
$4.
Well, $4 was the last pullback that. Sorry, $4,073.70 was the recent pullback. But we just tipped to all-time highs right now. So I would expect a more decent pullback to our trend level, which would be around 38.50. So I would be getting around 38.50. Let's call it 39 to be safe. That's where I would be looking to enter into any long position, either levered long or if I wanted to accumulate for a big move up.
All right. Thank you so much for those questions, Brasco. For everybody who's watching, like and subscribe. And also when we stream live here, perfect opportunity for you to come in, ask Tom to take a look at the charts and see what the Lord of Liquidity has to say about your particular coin. So if there's some coin out there you want us to take a look at, something about the market, or just a general question, please feel free to ask that during the live stream. It's a perfect time for you to do that. Really appreciate you folks watching. Let's get on with it.
Yeah, so make sure you get those indicators at sacredprofit.com. They are free. Make sure you don't risk more than your account can lose. Forget about willingness. Don't risk more than 2.5% on any given trade. Doesn't make any sense to do that. And above all, don't worship me, guys. I'm just the voice.
Don't worship me.
I'm a available man, just like anybody else. That's why I created these indicators, Peter. Take it out of my hands. They want my voice at tones, they can. I only carry the flame. That's right, guys. We'll see you next week for more Sunday Fuel.
Stepping the pole, pinstripe cufflinks, mint condition kicks, flipping these candlesticks quicker than Moses flicked bricks. I'm the mouth algorithm.
You can take off the music. I gotta play this outro thing. You can keep it on if you want. I mean, if you like that music instead.
Oh,
we're still on stream. I hope you know that.
Yeah, I can see Bitcoin should certainly bounce from here, Peter. I want Bitcoin to bounce from here. If I'm gonna go with hope, it'd be perfect for it to bounce from here. I just wish it cleared 109.9. It didn't. It just got so close.
I don't understand. Okay, so if we hit 84,000 and we're still in a bull market,
and
I mean, buy, right? Isn't that
buy?
Isn't this great news?
That's right.
I mean, let it get as low as possible.
It's just like when we were at 74. 74 was the perfect time to buy. I mean, it was perfect. So if we get there again, fine. 33% drops, 30% drops, totally normal in Bitcoin.
So,
Totally.
I mean, none of this is like bad news. Like, the lower it goes, the better our entry is. If we get an 84,000, the long you can hold on that, if it goes up, I mean, you make it a ton of money if this goes down. I think we should have titled this thing, "You want Bitcoin to go as low as possible." 84,000, here we come.
Well, just if you just consider the move from 74 up that we had last time. So if I'm right and we get the 33% down, you go long over there. If you just held the one position long, that was a 65% move. At 50x leverage, you made 32 times your money. 32 times your money just by holding the one leverage long position, 2.5%. You hold it there. Around 74, you move up to 65%. 50x leverage, you made 32 times your money. That's poly market prices right there. And so if we get that 33% drop again and we head down to 80 whatever, are you kidding me? I could take 25 bites of the apple and I'd still be happy. It'd be great. So I'd be fine with that.
Well, this is exciting. I don't know why do you seem down when you're talking about the market going down? It's because your call didn't work out, the 119?
Yeah, not only did I call not work out, but like the Marauder Monday didn't work properly. And all that really worked were the daily levels. And so it was a great like it was a great week for like day traders. In fact, on my prop firm account, I made $900 like without even trying. But you know, that's not what we're here for. We're here. I look at it and I go, what indicators can I make? What improvements can I make that would make this clear? Where like I wouldn't have been.
I don't think there's
by
any of this guaranteed stuff that you're talking about. It's not going to always be this way.
That's loser talk. All right. I didn't think I could make the indicators that I made already, and they're fantastic.
All right, let's take this conversation offline.